Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, July 19th, 2019. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the daily time frame of the ES. You'll see here that price continues to hold above the top of the key range here. This was the high of the year up to that point, 29.61 quarter. And so far this month of July, we have held completely above that point, forming a nice little range at those highs and giving us a very clear breakdown point if this thing were to fail. 29.60 again continues to be that level. If it fails through there, we open up a return back toward the 28.80 level with a shot to continue across the range to 2800 or perhaps to the previous June low of 27.25. So there could be quite a tumble if that 29.60 is taken out. However, up until now, we have seen this market continue to be very resilient, very buoyant. We've seen every pullback into the PEMA trigger zone be bought, and we talked about that yet again, how the price was right inside that trigger zone, and we were looking for signs of rejection of the prices below the Wednesday low. And that's exactly what happened yesterday morning. Price bounced off the 29.70s, 29.80s, and then rallied into the close. We're now seeing price hold throughout much of the overnight session here, providing again another kind of compression type of day after the rally yesterday. And again, if price can continue to hold above, say, the previous session's midpoint here, we could be looking at more upside price action ahead. A failure to hold above the previous session's midpoint, which is 29.90 basically, that would suggest a failure of this move and perhaps a retest of these lows. But so far we haven't had to see that in this entire rally since June. So overall we continue to hold in this uptrending market, but the breakdown point continues to be 29.60. Alright, let's take a look now at the NQ. You'll notice very similar price action. Price continuing to bounce out of that PEMA trigger zone time and again. We saw it again yesterday where price pushed below the Wednesday lows and then rejected those lows and rallied back up. That's a pretty strong move that we saw yesterday, especially to close out the day. And right now we have a range that is formed at highs. 42% of average range right now. The ES is at 56% of average heading into RTH. And again, this market right now very resilient, very buoyant, and suggests that we could be looking at another bounce opportunity ahead. A failure to hold the 7,800 level here would open up a failure and perhaps a rotation back down. Again, that's just the breakdown point to watch for if we do start to see some weakness. But for right now, everything continues to be pointing up and everything suggests more upside until proven otherwise. Alright, let's take a look now at crude oil. Crude oil had quite the tumble in the previous session, down 3% at one point in the day. Sold off from the previous session's midpoint. The open was offered straight away, and the open has been offered straight away each of the last 3 to 4 days. Right at the open, sold off. Right at the open, sold off, etc. For 4 straight sessions to push this thing back to the 55 CLVN. We talked about before how this could be developing an expanding type of range here, and that's usually a really good range to work off of. That's why I mentioned before that if price were to get below 56s, between 56 and 55, there could be an opportunity to see rejection and then perhaps a return to highs as this thing comes up here and hunts between 61 and 62. So we could be looking at a solid turnaround here. At the moment, we haven't seen a very sharp rejection of these lows just yet, so we may continue to see a test into the 55s. But again, as long as price can continue to hold above 55 and can reject those levels, there is a shot to start to see a return back up towards 60 to 62. That could be a very strong target over the next 5 to 7 days, but we got to continue to see if price can hold these levels right now. Another narrow range heading into RTH, this one trading 42% of normal, and the open price has been offered each of these sessions. So if today's open price is bid, that could be a change of bias here over the course of the day and perhaps heading into next week. So keep that in mind. Now 55 continues to be the major level, and you want to see price continue to hold that zone if a bounce is going to happen. All right, lastly, taking a look at gold futures, you'll see gold has reached new highs today, reaching 54.40. So continuing to hold above the 1375, continuing to test 1440, and now reaching the 1450s. This overall has been a very narrow range throughout much of the month. We've had an explosive June, and that was likely going to lead to a kind of quiet July trading range. We've seen that now play out. We have not had a proper test between 1375 and 1380, but you can see a very clear LVN down here. Even if price were to drop down into that zone, it still offers a great opportunity to buy. Right now you see a very clear D-shaped profile that is developed above 1375 and into 1455. And so again, given that rejection that's starting to develop up here, we may see another return, at least back to value between 1400 and 1420, and that's also where the previous month's close is. And while we may not see it drop all the way back down, if it were to drop down here, it would offer another buy back up. So right now, showing some weakness here after the recent rally. The overall bias is still to the upside, and if there were a test down into this zone, it could be a great buying opportunity for a continuation higher. All right, that is it for now. Happy Friday, everyone. Please be sure to like, share, and subscribe, and I will see you all in the trading room. Take care, folks. See you soon.